Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking back in on the Canadian MJ sector, starting with CGC, a bearish end to the week, and you can see every time we have this higher open, the bears take full control of the day. And it's pretty frustrating. It's almost like the market makers are doing it intentionally. I'm sure they're making money on it. They know the routine and the pattern at this point. So Red Marubozu with a close down at the low of the day on Friday. Bearish candlestick. $10 psychological support must hold. Otherwise, we're looking at 975 and then 965. I take that back. It's 975, then 960. And if we break 960, we're looking at the 50-day moving average, which is all the way down at 881, which is why 960 is a must-hold level. A break of 960 is a clear bearish break of the fairly tight pattern that we've seen over the past 3-4 weeks. Resistance is this middle Bollinger Band on the daily that's been rejecting the price for the past 2 weeks. It's currently at 1052 and dropping. You can see 3 days in a row last week we rejected from that level. Weekly time frame shows the bulls are still in control in the sense that this is still fitting a bull flag pattern, which indicates continuation. If we break 1060 or make that 960, it is a lot less likely that this would be a bull flag. So that is why another reason why the bulls really want to hold that level. Looking at MT still holds the middle Bollinger Band on the daily, which is why it is one of the more bullish names. Higher low and higher high pattern. That middle Bollinger Band support is 640, and a clear bearish break for MT would be a break of 620 and 621 here. The lows, which would have us look to the gap fill at 605. Resistance, same thing. We can see that clearly that with the higher opens, the bears have been in control. We've got resistance at 670, 691, and then up to 745. Weekly time frame here shows a big upper wick of profit taking, still holding exponential moving average support, not a bull flag pattern of consolidation here at this point, and it is still favoring the bulls, but again, consolidation on the daily time frame needs to see continuation for the bulls, but MT is the most bullish on the daily time frame, due in large part to the reaction to the news. OGI is still extremely tight, but close to a bear break. All these names closing down at the low of the day. Not a good sign heading into next week for the bulls. So the must-hold level here is 310, and then down to 305. If we break 305, we're looking at the 50-day moving average, and that's going to be at about 305 early next week. So if we break 305, we're really looking back down at 240. So this 50-day moving average and that 305 level are must-holds for the bulls. And we're looking at resistance of 327, 333, and then 353, the lower highs the past few days. And very clearly, the bears have been in control Wednesday, Thursday, Friday of the majority of the sector. Weekly time frame, trading straight across, sideways consolidation. Again, all of these weekly charts are still bullish, considering where we have come from. And every time we consolidate, it has led to continuation to the upside over the past year. So it is still very bullish on the weekly time frame. It's just the daily time frame that is close to a bear break. ACB, Rejected from the middle Bollinger Band daily resistance. That's at 246 and dropping. Again, ACB is the weakest and most bearish on the daily chart because we have the lower high and lower low pattern. We would have to break 264 now at this point to break that lower high pattern. Key support is the low of Thursday, 222, and we have support 223 and 222. If we break those levels, we're coming back down to $2. Weekly time frame for ACB, not as much information as the other names. Upper wick showing some profit taking, but it is still a bullish reversal candlestick on the weekly time frame that would need a green week this coming week to confirm it. APH, just like OGI, is in a very tight pattern on the daily still. The levels to break here that would be bearish are 496 and 485. Then we look to the 50-day moving average and 469. Resistance, again, the middle Bollinger Band, same thing. Look at these rejections on these last few bounce attempts. Unable to close above that level. It's at 519 and dropping. Bulls need to see a break of 527, 530, and 556. Sideways consolidation on the weekly still favors the bulls, but need to see some follow through and a close up near the high of the week to show strength into the next following week, which obviously we don't have here. So OGI and APH are very likely to see breaks of their tightening daily patterns this week. And obviously the bulls want to see a bull break. But if we do see a bear break, it's about the 50-day moving average support coming up next. SPRWF can't get a chart on SL, but it's a very clear bear break. This was another one that was a very strong uptrend on the daily time frame, holding the middle Bollinger Band daily support for the majority of the breakout. And look what happened after we lost it. We lost that level on Thursday, closing below it. On Friday, we see a huge bear volume day and a dump and a close at the low. So we're looking down now at the low of November 22nd and 23rd. That's the next support down at 110 and a big setback for these bulls in the short term. And that volume is a big red flag. That's the highest volume we've seen in a month, and it favors the bears in a big way. So that's the last thing that OGI and APH bulls want to see. Same with MT that still has that middle Bollinger Band daily support. A loss of that level would likely result in an increase in bear volume and the bears taking over in the short term. So a lot of key weeks coming up here, pretty much for everybody, although SPRWF has already gone to the bears for the short term. And we will see if the other names follow or if they can turn things around and see some bullish movement to the upside. Keep in mind long term that we don't really have any near-term catalysts that will spark, the millions of dollars, the tens of millions of dollars needed to see the kinds of big breaks that we've been seeing for the past few months. So while it is bullish consolidation on the weekly time frame, certainly still favoring the bulls, it's hard to imagine what would cause money pouring into the market again at this point. We already had the task force announcement, and we need to be prepared. If you are a long-term bull, you are prepared that we could potentially see a 20% drop from here over the next few months, slow and steady, if we don't see any kind of catalyst to the upside. So my suggestion, if you have a long-term position, would be to also have a shorter-term trading position around that you could play around with. If you want to leave, one for 5 years and not touch it, that's completely fine. But you want to be able to take advantage of this volatility that we see. And obviously right now there's not much bullish volatility. So I personally would have my money in cash waiting for another opportunity to arise or waiting for the bulls to prove themselves by breaking a lower high pattern on the daily time frame that is still intact on most of these names as we've been consolidating tightly and sideways over the past month. So we'll see how next week goes. APH and OGI should see some clear spikes in volume, and you can see that volume tapering off towards the end of the week for OGI, and same for APH, although we did see a little bit of an increase in volume on Friday. Clear breaks likely coming. We'll see which direction it comes in. Have a great rest of your weekend. See you soon.